In the last year, there's been a massive shift in ethical and sustainable investing in the UK, specifically when it comes to unit trusts, investment trusts, and exchange traded funds. So if you've previously looked for ethical options, you might have noticed things do seem a little bit different when you look at them now. And that's due to the Financial Conduct Authority, the FCA. They actually had a new sustainability disclosure requirement known as SDR. Now, this framework was designed to bring a much needed transparency and combat what was called greenwashing, where funds were making misleading sustainability claims. Now, there are two main pillars to the SDRs. The first is an anti-greenwashing rule, which is mandatory for all FCA authorised firms. And this rule demands that any sustainability claims made in communications must be fair, clear and not misleading and proportionate to the actual sustainability profile of the product in question. Now, the second pillar is the voluntary labels I've just mentioned, and these are labels which fund managers can choose to adopt for their products from the 31st of July last year. Now, the system introduces 4 distinct investment labels designed to help you differentiate funds based on their sustainability objectives and approaches. Now, to qualify for any of the labels, the fund must meet strict criteria, including investing at least 70% of its assets in line with its sustainability objectives. Now, the 4 labels that I'm showing on screen include sustainability focus, and this is for products that invest in assets already deemed environmentally and socially sustainable, consistently meeting a robust standard. This has been the most popular label so far that funds have applied for. Then there's sustainability improvers. This is for products investing in assets that have the potential to improve their environmental or social sustainability over time. Then you've got sustainability impact. Now, this label is for products whose primary objective is to directly achieve a positive, measurable environmental or social outcome. And this is the second most popular label. And the last label is sustainability mixed goals. And this is for products that combine elements of the other labels, pursuing sustainability outcomes both directly and indirectly. Now, before I move on, there is also a new naming and marketing rule which came into effect from December 2024, and there was a bit of temporary flexibility until the 2nd of April 2025. And what it means is that funds that don't qualify for a label or choose not to have one, don't forget you don't actually have to apply for a label if you don't want to, if you're a fund house. So this means that many of them will have changed their fund names, and you will have seen that in your own portfolios where funds have suddenly changed names in the last couple of months.